let's move on and talk about Berger Paints, right? Because that's a company that has witnessed a mild growth this time in Q2. Gross margins saw sharp expansion, though. The volume growth is also in double digits. Abhijit Roy, the Managing Director and Chief Executive Officer at Berger Paints, joins us now. Abhijit, thanks a lot for joining in. You know, the top line growth was about 3.5%, 3.6% to be precise. So I just want to start by asking you, can you tell us what was the volume growth across your product portfolio in this quarter? And can you break it up for us in terms of the product mix as well? And what's the outlook for the second half of the year?
So the volume growth, across all sectors put together was about 10.9%. If you break it up, primarily it came from the decorative business. Also the industrials this time, did reasonably well. And therefore, overall growth rate of volume was about 10.9. Going forward, I think, as far as the volume growth is concerned, will probably be around the same points in Q3 and Q4 as well. But the value growth will go up. In the second quarter, the value growth was a bit muted because the mix of products which were there were more towards the lower end products. That's the nature of the market of paint, because in Q2 normally the luxury category of emulsions, the premium emulsions sells lesser because of the heavy monsoons which happen at that point of time. So then, in Q3 and Q4, it comes back. So you will see a lesser volume value gap. So value will be much higher in terms of growth rate than what we have seen in Q2.
Okay, so you're saying volume growth will be steady around this 10-11% level, but you'll see more value growth rise further in the quarters to come. So would this mean that you can build on to your margins as well? I mean, this quarter your margins were 17% plus. Is there scope to build on to that because value growth will improve?
Yeah, so it might be somewhere similar to that, because this rupee has depreciated a little bit. Some of the raw material prices have also moved up somewhat, but it will be somewhere around these points only in terms of gross margin and also the EBITDA margin.
Right. Hi, good morning, Mr. Roy. Good to speak to you. Well, in terms of market share, you were telling us that, you wanted your market share go closer to around the 20%, I think, odd mark. Are you on course?
Yes, so that's the good part, that we have crossed the 20% market share mark, in the first half. Till results of whatever has been declared, by the top four players, so by that logic, yes, we have crossed the 20% mark. We were at 19.3% last year, end of last year, the India operations that we have. And this year, by the end of first half, we are at 20.1 approximately.
Oh, that's good news then, Mr. Roy. You had told us maybe if towards the end of this fiscal, but looks like you've achieved it earlier. So good on you. Now you've added some capacity. So as a percentage of your total capacity, what is your utilization levels currently?
So, the one plant which we put up, Sandila, is operating at around 48 to 50% now. Overall, the capacity utilization is around 70% to 72% as of now. So, I think, as we ramp up, in terms of volume growth, as we are seeing, possibly the utilization of the Sandila plant will also keep going up.
Mr. Roy, hi, good morning. The other point where you've been aggressively kind of moving forward is distribution, right? Could you tell us how many more distribution points were added in the quarter and how is that going, that spread out going?
So that was, we had a very good quarter in Q2. We added about 1,700 color bank tinting machines and about 2,000 more retail outlets, total overall, including the 1,700. So 2,000 retail touch points, which were added, and about out of that, 1,700 were color bank tinting machines. So that's a fairly strong number. And we expect that in the third and the fourth quarter also, we will be able to ramp up, our distribution network, which has been one of our key focus areas.
Okay. So when you talk about ramp up, can you tell us what is the target over the next 1 year?
So this year we are going to add about 6,500 tinting machines overall, and about possibly around 8,000 retail touch points. And coming year also, we are planning to do a similar number. So it's a strong growth. We have been doing about 4,000 to 4,500 color bank machines. This year, we will cross the 6,000 mark for sure. Probably we are attempting 6,500.
So once this ramp up happens, just trying to understand any market share, guidance that you have by the end of, say, FY25, where do you hope to be in terms of market share?
So we expect that, incremental gains will keep happening as we have been seeing for the last 2 years. We've been growing at about, market share gains have been between 0.5 to 0.8%. That's what has happened for the last year. And this year also, we are seeing a similar trend. So like that, we would like to go in steps and, keep improving our market share.
Sorry, Mr. Roy, just one quick thing, clarification maybe for me and for the viewers. You said color band printing machine. So, and you said there's 1,700 of those and total touch points is 2,000. What's the difference?
Right. So, there are some counters which are without printing machines. They are, for under, suppose, we have opened some distributor and he's selling to smaller retailers who doesn't have machines as of now. These retailers may at a later date take a machine, but as of now he just buys the non-tintable products like enamel, distemper, primer, etc. So 1,700 of them are the emulsion category sellers who print their products and sell in the market, and there are about 300 more which have been added, taking it up the total to 2,000. These 300 do not have printing machines in their counter but sell other products.
Okay, all right. Mr. Roy, good that you have been gaining market share and you're sounding fairly optimistic out there as well. But there's going to be a new large player coming in, Grasim. How do you see the dynamics turn out there? Will you still continue to gain market share? And how are you preparing for this? Ad spends is a percentage of sales. What is it? And are you looking to up that?
Yeah, so it will be a combination of action. We believe that, we know the Indian consumer quite well, and we have faced competitions in the past. Both, there are existing players which are quite, fierce in competition, and also, there have been international players who had come in earlier, and we have fought them in the marketplace. So it's fine, one competitor more, is going to possibly add some amount of, fun and games in as far as the market is concerned. It will become more interesting, but I don't see, us being unduly worried on this count. I've been telling this earlier as well. In the decorative business, it's very difficult to penetrate that easily. So if you see the stories, even in India, you take Lucknow and Kanpur. In Lucknow, we are the leader. In Kanpur, Asian is the leader. And this has been there for the last 12, 15 years, So it is not that simple to break into a market, because it has dealers, painters, contractors, interior decorators, consumers. Everyone has to be aligned onto your brand. And that takes a long time. So we are not very worried about, what is going to happen, immediately, what action will happen. There might be some short-term skirmish, but we are well prepared for that.
All right. It's interesting how you describe it, some fun and games. but, point taken, sir. I think, these are entrenched kind of businesses and been around for a long time, so not very easy to disrupt. Point taken. Mr. Roy, great to have you with us here. Thank you very much for your time. Appreciate it as always here on CNBC-TV18. Nigel.